Very good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at the charts together today in this session. So hang on there. Before we get to the charts, though, we're just going to take a look at this disclaimers, and then we'll move on to see if there's some interesting opportunities today. First of all, the disclaimer explaining that this material is developed by Admiral Markets for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please visit admiralmarketsglobal.com, select your country, and contact an appropriate entity. Also, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So, thank you for your attention on that. By continuing viewing this webinar, you agree with the risk disclaimer and you have read it and know the risks involved, and you know that you're responsible for those risks. Good. So thanks for your attention again, and we're going to take a look at Forex trading and take a look at charts. In general, the trading plan that I want to show you is basically a rough guideline. Of course, it's just a quick outline of a potential trading plan. Considering that the lack of time, of course, it's just a guidance. But I do think that all these 5 aspects are very important for anyone's trading plan. And you definitely want to think about what is the trend and if you want to trade against it, with it, in a range. That's step 1. Step 2, what kind of opportunity are you looking for? For instance, if you're in a trend, are you looking for a small pullback? Step 3, are there any filters that could block your trade? Step 1 and 2 are just a trade setup, but if you check the filters and there's some divergence, for instance, then that setup is definitely not a trade you would like to take. So it will be filtered out. That's something you definitely want to think about. So then after the filters and the trade setup is still valid, we're getting closer to a potential trade, of course, and it becomes from a confirmed, or it changes from a confirmed trade setup into a potential trade setup into a confirmed trade setup. Sorry. Then step 4, we're looking for a trigger. For instance, a break of the moving averages. That could be the trigger, but it might not be the entry. The entry, for instance, could be a pullback to a fib after the breakout. Right. So this is how we can establish different points of our trading plan. Most of the time I'll be using fibs, trend lines, and moving averages. All right, those are always my basic and main tools and indicators. And no matter what the theme is of today or any other day, those items will always be coming back. Good. So make sure to take a look at Admiral Markets in the social media. And with that said, let's take a look at the Forex calendar. Yesterday we had a Bank of Japan press conference which sent some yen weakness into the market, as my edited wave estimate or analysis provided yesterday. If you have looked at that particular wave analysis, you would have seen a green arrow to the upside upon the break. That trade was good. I don't know if anyone took that trade, but that was a nice, neat trade. Let's take a look if the yen weakness potential has anything more left for us. And we'll find out soon enough. Today we have the pound CPI as well, plus some other pound news, as you can see, quite a long list, plus some dollar news. What else do we have this week? There it is. Pound meeting minutes tomorrow. We have tomorrow FOMC meeting minutes for the US, so that could be, of course, very interesting. Both these meeting minutes for the pound and dollar to see which direction the dollar could go. PMI Germany Thursday, retail sales on Friday for the pound, and some CAD and USD. Good. FOMC, I guess, the most important at the moment. So let's head over to the chart and take a look at our euro dollar first of all. I don't get confused by all these lines. These are just moving averages to see what the direction is of the trend. At the moment, we can see that's up. By the way, before I actually dive into the webinar. Let's take a look at what today's topic is. It's actually range trading. That's a bit different topic than usual, but let's keep that in mind. So I'm going to have to reverse my hats and think a bit differently, because normally I'm usually looking for trend trades. Well, if we're looking for range trades, then the euro dollar is definitely a good one to start with, because the euro dollar in general has been certainly ranging quite a lot compared to other currency pairs, at least. There's really not much trend, there's really not much direction. If you look at the moving averages here, they actually provide a good idea why it's ranging, because the longer term ones, the blue and the dark red ones, you can see are just almost flat, in fact. Let me open my drawing tool. I don't have that yet. So you can see that the moving averages are totally flat. Well, that's always a good indication of a range. The moving averages are flat, and price is trying to escape those moving averages and try to break above and below them, but the price doesn't manage to do that. So you got averages, roughly speaking, flat like this. And you got price, when it breaks to the upside, it gets rejected, and when it breaks to the downside, it gets rejected, and its price is doing something like that, and the moving averages are kind of roughly in the middle. That's a range. That's not a trend. Now, this has that a bit. It actually does have a slight trend to the downside, but it's very slight, with emphasis on that word, because of the angle, of the entire angle, which is weak. But if there is a trend, it is slightly down there, and up there was a pretty decent move actually. Where the trending mode is more apparent is probably the weekly chart. In fact, you can see here the moving average is totally flat. And this price action, of course, is very choppy and corrective, right? You can see that. Now, although that looks choppy and corrective on the weekly, and the moving averages are flat on the weekly, on the daily, we did have a very slight up. Sorry, let me move up here. We did have a very slight upside angle. There it is. So there was a bit of an uptrend, although on the weekly chart we can see that it's very slow, it's very corrective, it's very choppy. But price did respect the blue moving averages and used it as support. So in that regard, there is the potential now again to get some upside, just like we had here, just like we had here, and just like we had here. We can get the same here. So that's the potential for the euro dollar. There is a top close by, though, as you can see, a daily top right here. That's not a level that we want to go long right in front of that level, unless you're looking for a range trade. I'm not sure if this is the best. No, unless you're looking for a range trade, you would look for downside, excuse me. In any case, you're not looking for, no one's looking for long right in front of resistance, of course. But a range trader could use this resistance as a potential for price to bounce off to the downside. Now, that idea is possible, but it has quite high risks because of the, still, although it's choppy, there is still an uptrend. So down to the 4-hour chart again, and you can see that this recent price action here, this stall where we move down to the blue moving averages, right? That last green circle, that is this, right? And that's very choppy, and you can see very slow methodical downside movement there. So if there's any potential range trade, it could be from here, but it doesn't look really like a range as yet. We just have a top, basically. So I wouldn't really consider that as a range trade as yet. On this euro dollar, let's take a look at the hourly. Hourly is moving up. There's a small range maybe in this area right in here. So let's take a look at that on the 15. But price is still actually acting as support. You see that? We need the blue moving averages to be flat, really, for a good range. Okay, because if the blue moving averages are still pointed up and they're acting as support, this could still be a trending mode. This could still just be a chart pattern. This could still be a triangle, and price just retraced back to the blue for support, and we're bouncing up and continuing. That's not a trending of. That's not a ranging environment. This is still a trending environment, which means for range trades, it would not be qualified as yet. 1 hour is definitely trending as well. You can see, look at the angle here, very strong. Look at this angle, very strong. So the euro dollar is at the moment on the 1 hour time frame. It's an uptrend. The only thing, of course, that's definitely obvious is that the fact that price is close to a resistance, and that's why it's probably struggling. That's why probably price is moving a bit up choppily, because it has that bigger resistance close by. And well, this is the classical battle between trend and support and resistance. In this case, resistance, right? Who's going to win? Will the trend be powerful enough, have enough momentum to break through the resistance or support, for that matter? In this case, resistance. That's always the question. The answer is never known. If it's a very strong level, usually price doesn't break through it in one shot. Price will respect it by stopping at it and making some kind of consolidation, smaller pullback, bigger pullback, or even a potential reversal, in which case we get a trend in the opposite direction. After price has made some type of consolidation and then continues to break out to the same direction, then there's there's the example of a trend continuation. All right, so something like this. If we have a trend, for instance, let me write that down here. Theoretical example: price moves up, hits the resistance level. There are certain options: reversal, bigger retracement, or some kind of consolidation, right? Or maybe something like a bull flag, right? And any break of that bull flag after a decent bull flag or consolidation would justify a trend continuation trade right there. So those are the options right there. So that's the problem we have with the euro dollar. So I don't find the euro dollar at the moment, although we have a potential to break out right now. There's not much space until we bump into that resistance. It is, I wouldn't say it is not a bad idea. I don't think it's anything wrong with it. There's still some pips to the upside, plus the risk is small because the moving averages are and support is close by. So I don't think there's anything wrong, but it's certainly not a range trade. It's a with the trend trade, which wouldn't qualify for today's kind of philosophy or trading plan. So it depends what type of trader you are. From the 4 hour perspective, we need to break above this top, and then there's the potential to break out to the upside. Once that resistance is broken, there could be a trending mode and a trending break. The next resistance would be all the way here at the top, or maybe even this level for a potential inverse head and shoulders. Right? If the price makes this up move, if the price does go up to 138.30 and stops at 138.30, right? What's the first thing we would think of? Yes, a potential head and shoulders, right? It's possible. We don't know. If price breaks above that level, then probably it wouldn't. So that's why we have to realize that 138.30 could be resistance. If we push through it, then the top, of course, is resistance at 138.90. So you can see the green boxes are those wide open spaces within the trend. Once we break above the top, of course, then there's the potential for price to move to target. We can see if we put a fib from the very bottom to the very top, price at fib, minus 72 is 141, minus 618 is 144, 149. Well, sorry, 145. Or the other way to do it is go to the weekly chart, in fact, and say, okay, we'll put a fib on this very first up move. Target is at 141.80. Or we can put a fib on this very last down move as well, because this is a contracting wedge. And then we can see a 78.6 fib at 143. So if there's any range trader in there that's using the weekly chart, they will have they could be very interested in shorting from that 143 area, for instance, and maybe they shorted already the 138.30 area, but that particular resistance, the 61.8 fib, that resistance price did stop there, but we got just weeks of consolidation to the downside, which means that we can see in this higher highs and higher lows on the weekly chart, what happens if price makes a higher low? That could be a trend continuation, right? All this downside, weeks and weeks of downside, was basically so far is just looking like a higher low on this weekly chart, doesn't it? And price stops at the moving averages. And how many weeks of downside, small downside, did we have? 1, 2, 3, 4, 5, 6 weeks. And now we have a couple of upside weeks. So you can see that all that could have been a higher low, and if we break above, again, if we break above these reds, then we have this breakout trade potential to the upside here. And then range traders would be interested in the 78.6 downside, and reversal traders. Yes, Buren says it's a very small risk if you trade a top or bottom, but you can win a lot. Certainly, of course, that also is combined with higher risk indeed, but there is good potential in some cases. It's not as easy to trade regarding sometimes stop loss and maybe hanging into the bigger profit, for instance. But if executed nicely, it could be a good RTR, a great RTR indeed. Definitely. Small risk sometimes, especially like a 786 fib here. If one uses a 50 pip stop loss, for instance, which I normally don't recommend. I normally recommend technical levels, but then the stop loss would be at least have to be up with 146.50, which is still okay considering the potential reward, in fact, right? Anyhow, that's way in the future. So let's take a look at the pound dollar. Pound is definitely not a range trade because look at this trend, right? Very, very powerful, very steep moving averages, green moving averages, very steep blue ones as well. So a lot of momentum here, big trend on the hourly. Certainly no choppiness. And we had a bit of a reversal here. Let's see how far this can go. Let me take a look at the awesome oscillator. Is there any divergence? No, we don't see any divergence. Look at these tops here. No divergence as yet there. So let's put a fib on this upside. Price could maybe go back to the 38.2 fib and then bounce from there for more upside. Looking at the fact that there's no divergence between this top, and there's a very strong momentum driving this upside, a break of this top seems very likely. The question is only when and where and how. And it could be from the 38.2 fib. One way of knowing it is, for instance, if we get a break above this top right in here. Could be an early indication. At the moment, that would be the best indication. All right. So let me just write those values down. And let's see, Cloudy. I will put those in writing so you can see it easier. Okay, they're both EMAs. And both sets basically have high, low, and close. There it is. Let's see, time frame. I bet you can. These particular ones I can use on any time frame. I wouldn't necessarily recommend starting with the 1 minute chart though, because 1 minute chart could be very choppy. but in theory, it's really any time frame because they give idea of angle, of trend, momentum, relationship of price, etc. Of course, on the monthly, it wouldn't be too useful, but we can, even there, it still provides some value. So, yes, 50 minutes for sure. Well, I know there are traders who use it on 5 as well, but I wouldn't recommend starting with 5. I think it's better to start with higher ones indeed and understand those first, and then maybe use 5 or 15 because then the puzzles of the pieces of the puzzle make more sense on the higher time frame. Kind of like step by step, I would say. 5 is the most difficult indeed, and then 15 is a bit less difficult just because there's less to incorporate and look at. So we get a potential. This was a pretty steep pullback. So let's put a fib on that one, and we can see what is the target of that. The -272 and the 38.2 fib around 166.55 there, 166.60 are lining up pretty nicely. Also the 50 and the -50 fib percent, 50% fib, and the -61.8% fib target are also nicely lining up at 166.10. So that's the hourly perspective. No range trade there is 15. Let's take a look. It's a bit of a mixture there, but I wouldn't take a range trade on this time frame with 1 hour chart trending so much. So let's take a look at the 4 hour chart. And the 4 hour chart, you can see maybe there's a move back to this green band, but that should be then a bouncing spot. Personally, I'm not too interested in this downside, more in catching the upside, which could either be back at support or upon the break of resistance. That's the 4 hour chart. You can see here too, very strong, very steep pointed green band here. So if it's steep like this, there is a very strong trend going on. And here too, a very strong AO reading. So here too, once maybe this AO gets back to the zero line, a break of this top is very likely in my opinion. Also, don't forget, from a bigger perspective, let me get rid of this fib for a second. Very important, as you probably already know, is that on the weekly perspective, price is actually broken through the 167.50 level, which is this big weekly top. So this consolidation is actually looking at the moment like a bullish consolidation, like this consolidation, and we're getting a breakout to the upside now. Eventually the target could be, if we get more follow through, 180. Where's the -272 target of this 78.6% Fibonacci bounce? And that could definitely be a wave A or 1. I think in general the monthly chart is looking pretty choppy, so I would use a more conservative method of saying this is probably A, and A is often equal to C. So if we can measure this length and say, okay, what is the bottom here? 134-ish roughly, 134.30 to be exact. This is 170.30 roughly. So basically about 3,600 pips. If we take the bottom here and add 3,600 pips, we arrive at 178. 178. So that's pretty close to 180. I mean, from a monthly perspective. So that could be the target indeed. Although we still need to break above 170, which is a psychological round number, obviously, too, but also this top here. But that would be the breakout potential on the pound to the upside here, from 170 to 178/180. So yeah, great job, Björn. I like the wave idea. And let's see. Of course, this was looking like a bearish triangle, obviously after this downside, but just proves to show that you should, always be aware of both sides, because chart patterns like this do have a certain percentage, like percentage favorable for one pattern to play out, but doesn't necessarily exclude the fact that it could break out to the other side. And well, the first warning, of course, as we've already said, was the fact that we basically broke out of the trend line to the upside, right? That was our first warning sign, of course. When we broke here, we bounced basically, we bounced here at the bottom. Well, actually, we first had a breakthrough right there, right? We got some follow through of that breakthrough and a hook back. And then here we failed to really break and continue a lot more, right? We broke this trend line here. Remember, that was a while back, but this green one got some follow through, hook back, and continue, but that continue really failed, and we got an upside. That impulse was pretty strong, brought us back to the top of the channel, right? That's this impulse basically. Then we got a bull flag, and that bull flag got a break, pullback, multiple ones, break, pullback, continue, pullback, and now one more upside. And now we poked through that big resistance, but we poked through with a pretty, if you look at the price candlestick formation of the bearish candle yesterday, funny enough, that's why we're probably seeing a bit of downside today. So in that regard, wouldn't be surprised to see some retracement, but I don't think that retracement will go far, because if you look at last week's candle, I know this might sound a bit confusing, but basically yesterday we just had 1 day bearish, but last week was very bullish. And all we could do is retrace a bit of last week and then still find support. Obviously, a weekly candle like that is more important than one daily candle at the beginning of a week. So in that regard, I do think that this downside is just a retracement. If you look at last week's candle, it was very bullish, was very strong, no signs of weakness. So for the moment, I don't see any reason to change that. And I would consider this downside to be retracement from our upside, at least to 170, and if we break 170, up to 180, as we know. Even this angle of this, basically this green band is very strongly momentum. So there is a good trend here going on the weekly. So no trend trades. I don't see any range trades no matter what time frame I look at, in fact, because the weekly broke out of the range, broke out of the triangle. The daily is an uptrend. You can see price is above the moving averages, and the moving green is above blue. That's up. And we've been doing that since summer last year, right, where we had the switch here. 4-hour chart is trending, and 1 hour is trending. Everything is trending up. It's just waiting for price to either bounce or break. So in that regard, I guess we can move on. You can see price hit the 38.2 fib. This was a strong correction. This was a strong reversal, as I said, or reversal. Maybe I don't want to say reversal as yet. I wouldn't expect a big reversal. Let me use the more modest word of retracement. This was a pretty impulsive retracement, which therefore doesn't surprise me that we do see some downside here against the trend. And it wouldn't surprise me if we go to this this confluence, as I said. So what else is going on? Euro pound made big fall, now right at the bottom. I don't know, it's pretty choppy. So that's good actually for ranges. Let me take a look at that. Although it's choppy, it is moving with a downward slant. So yeah, it's not really an interesting trend. It's not a range trade or setup either, because clearly price is underneath the moving averages on all time frames, and this upside is retracement at the moment. So no range trades as yet. How about the Aussie? Aussie certainly prices above the moving averages and in an uptrend, but price is also moving back towards those moving averages. So it's making a retracement in an uptrend at the moment. But there's more going on here. This Aussie is quite interesting, in fact, because basically if you look at the daily chart, there's a good potential for maybe price to continue with this downtrend. That could be very interesting. Look, it hit the top, it hit the 38.2 fib. So that's a big resistance level. If it breaks that level, we can go up to the 50. But for the moment, it's hitting the dark red moving averages on the daily. So this could be a major turning spot for the Aussie. And who knows, we could maybe have a tremendous fall on the Aussie. It could be very interesting. This could be the hit right to resistance, and boom, we get a big downtrend here. Now, how do we know if we get a downtrend or uptrend? As I said, the upside, if we do break above this top, then there is a potential to go up to the 50 fib, and we have this space, this green box potential here. Now, I'm not saying just because there's a green box doesn't mean the price will make that move in one shot, in 1 minute bar. Obviously, it could have its ups and downs as everything has. But that would be the main, bigger target. That's the upside scenario if this uptrend continues on the 4-hour chart. How about if the downtrend continues on the daily chart? Because you look, definitely the daily and weekly, we can see a downtrend, right? Dark red and red, and prices below it on the weekly. Daily, this is acting as resistance in a downtrend. Price is just making a move back to that dark red moving averages, downtrend. 4 hours up, so there's a clash of trends. Clash of trends here. Daily, weekly down, 4 hour and 1 hour up, and the question is who's going to win? Which one's going to win? And if the resistance breaks, the upside is winning. What about the downside? Let's take a look. We have a trend line like this, potential. We have a trend line like this, potential. Let me redraw that. There it is. We had a potential, let's see, anything else? Trend line like this. Oh, what's that? So those are all trend lines. Of course, each time we break one of those trend lines, we have a fall potential to the next support. Now this first green one is an early break because obviously the momentum is up. So that will be one that could be choppy. It might not go too far because we have blue support as well here. So I wouldn't be that interested in this one because it could be very dicey. But the break of the second green one down to the lower green one, and the break of the lower green one down to support, and then the break of support down to the fib targets seems better. Obviously, if price does break through the blue and then starts to move up and uses the blue as a resistance, we're in a downtrend. That's how we can use these moving averages to understand when the trend has changed. So that's very easy. It's definitely still up, and price would definitely need to poke through the blue and hook back and then use it as resistance, and then we know that price is in a downtrend. And that would be the more conservative, basically more confirmation before entering a potential downside. And then we're basically waiting for the hourly to match and be in sync with the daily and weekly trend before trading it. which is definitely more safer. But the disadvantage is that there's a slight disadvantage in the sense, of course, that some part of the price action hasn't been traded. But the turnaround or the reward for that is that you have more confirmation. And if it doesn't happen, then you avoid trading an unprofitable piece. So that's the advantage. There's always, of course, up and down sides of anything. Depends on your psychology, depends how you like to trade it. If you're a reversal trader, then you are definitely geared and hunting for that 38.2 fib bounce. Did anyone take that? Which was a great reversal trade. So that depends. Also, of course, if you how you trade it. If you have entry order there, you manage to enter. If you're waiting for a live market order and you're sleeping at the Asian session, then of course it's difficult to trade. But I don't see anyone saying anything. Maybe not that many reversal traders. I like the trading with the trend myself, so I wouldn't be hunting for this one that much. Occasionally I do take reversal setups if I really like them, but most of the time I still want to be behind the PC with a pending order personally. But this one was a very nice one though. Hit 90.80 exactly to the pip. So that's the Aussie trending mode, nothing of a range. Let's see if the Kiwi can give us a range. Kiwi certainly on the daily chart in a range. The 1 hour and 4 hour have trending modes, but the daily is a pretty good example, I would say, and the weekly. I mean, this is certainly in a range. Whereas the Aussie is in a downtrend, the Kiwi is certainly in a range on the week. Well, the weekly is actually kind of a very mild upside slope. If you look at the moving average, look at the green moving averages here, they actually are acting as support. So the weekly is maybe not the best example, but the daily certainly is a better example. And price is basically when it leaves the moving averages runs into resistance, and resistance, I should make that red, and if it bumps, it'll leave the moving average to the downside, it bumps into support. That's typical for a range. Also typical is just that the moving averages are flat here, and the moving averages are about halfway that range. Do you see that? About halfway there. That's typical for a range. The more that the moving averages are intertwined with each other, the better that it is for a range, and the more a trending trader would want to stay out, and even a reversal trader wants to stay out. So let's take a look at a potential method to tackle this one. Price hit the resistance there, so we got a doji. One of the ways to, of course, trade it is a retracement of the doji with a stop loss about 10 or 12 pips above the high, yesterday's high. That would have been a good trade. That's doing very well so far. That trade was to happen today. A doji signal, of course, at that potential top here, certainly a way of understanding that price is confirming a resistance. Now, it doesn't always work because look at this big wick. That didn't get the respect. It actually, we saw some upside still. But the others, like this was a wick, this was a wick, this was a wick. They did pretty well. You don't want to take, of course, any of these candles halfway a range. A candle like this, halfway to range, is not important, nor is this one, right? It just doesn't provide that information, and it's not as strong because of the fact that price is about halfway to range. So you want to have price close to support or resistance for it really to matter. So basically there could be some downside maybe on the Kiwi here, although the best trade was earlier and higher. Doesn't mean though that the trade total Kiwi downside isn't possible to catch. It's just that that was the ideal setup probably, but there's always other opportunities, of course, remaining. We can see that once we have a 4-hour candle, for instance, below this trend channel, that could be the early sign of a reversal, but that wouldn't be a range trade. It would be a reversal trade, which is a bit different. The range trade was from here or from here, but that would be an early one, very early. But basically, a reversal trade, if we do break this channel and we do get a push up to hook back to the broken trend line, for instance, that could be one way of trading it. The other way could be to wait for the hook back and wait for a bounce before trading it to the downside. The other method could be to wait for the green band here to break, let it hook back to the black band, and let the black band act as resistance. Or, in other words, let price break through the blue band, then hook back to the red for resistance. All right, there it is. Sometimes there's a bit of delay. Sorry for that. There you can see let price break through the blue to hook back to the red. So that would be a way to catch that downside potential on the Kiwi. Now, obviously, on the hourly chart, this is an uptrend. So that's why it would be good to wait for the downtrend to settle and to set itself up. If you were early enough to take the range trade from here, then you're doing great. And you're well on the way. If you're not, then waiting for the trend reversal on the hourly chart is probably the best second option. So what else? Let's take a look at the dollar yen. Dollar yen not getting the follow through. It was talking about in the introduction about a breakout trade to the upside. That was based on the break of this green line. No, that was actually based on this break. Sorry, this green line break. Let me make the color a bit different. This magenta line here. So I don't know if anyone took that trade. Based on the yellow wave, I had a green line here in yesterday's post. So that was not many pips, but still a good, well, it's still 50, not bad, right? So price had two breakouts of this green and then of the magenta. But price can't break this top at the moment. So important support could be, for instance, these tops right here. If these tops don't hold, then we might see some downside continuation still. To, for instance, test this support right in here. And a fib we can put on. So that's about it. If we break below these greens, there's some space down to the next green. If we break below that green, there's some space down to the 78.6, and that could be a bouncing spot. All right. Now, if this keeps pushing through, then eventually, of course, we will eventually get a break of the bottom, and then we should see some downside to 100. So I'll put the arrows there on the chart so that everyone can see which spaces there are on the dollar yen. And basically by using basic support and resistance, moving averages, and trend lines, we have an idea of where these spaces, where price, if it breaks certain levels, what the most likelihood is of price moving to the next level. So that's how you can use technical analysis to gauge that. All right. Now, because this is a range trading webinar, I don't want to disappoint the people in here by by focusing on trends or something like that. It's just that I just look at all the currencies and I'm looking for an environment that matches ranges basically. If it doesn't, then I'll just tell you it doesn't, right? I don't want to start looking for ranges that are not there, right? Basically, the way I look for ranges is my primary method is the lack of a trend, and the definition I have for trend is an angle on these moving averages. And if price is then bouncing around them and the moving averages are flat, basically, and moving averages are flat and price is bouncing around them and the moving averages are intertwined, well, then there's a range in my opinion. Right? Now, you could use an oscillator, I'm not saying, but this is just my method of using it. I'm not a big range trader, so maybe you have a better method. But for me, this is the simplest way to look at it, simplest way to see what's going on in the market structure, and thereby understand whether, what the structure is of the market and where the spaces are, like we're doing here. Obviously, if we break above the top, then above this resistance, then we have breakout trade to the 272 target, and then up to the minus 618 target. Right? So this is how you can space out all of these currency pairs and make a decision tree for price, or a path of least resistance, or a potential path of least resistance. So let's take a look at the pound yen. The pound yen broke up to the upside nicely yesterday. It bounced here to the upside, was good. We can see pretty strong bullish price action in the 4-hour chart here. Daily chart is definitely in a strong trend. Right? Because look, price has been above the moving averages, above this blue band for a very long time, ever since basically the uptrend started here on September 2012. Price has been above this blue band. Of course, we had serious dips back to the blue band, but besides that, most of the time price was even above the green band, as I said, with an occasional exception or one or two, here and here, 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 and now here. But most of the time price has been above green and blue. So, simple facts like that are easy to forget when trading, but very powerful concepts though, as you can see. So price is now back above green. So what does that mean? Well, I guess you guessed it. There's the potential to continue, isn't there? One thing we could check is if there's divergence. This is the pound yen, by the way, daily chart once again. Is there divergence? Well, there is a bit if you compare these two tops, but not if you compare these two tops. So there is actually hidden bullish divergence between these bottoms here. Right? If you look at the bottom here compared to the bottom here or here, so basically compare green with the blue circles, and you compare those bottoms to the oscillator bottoms, then we have what you call hidden bullish divergence, right? So that's why price is also moving up so fast. I don't see any divergence between the tops where I have the red circles there. Not at least between those two tops. Maybe if you look at compare orange with red, we have a bit. But I do think that at least one more break of this top of the orange top there is a decent probability. So yes, this could be a bullish breakout. So if we then zoom into the 4-hour chart, what do we see here? We see the bounce off the daily support in a very bullish fashion, and price is also, everything is blue-green here. So that means we need to break, basically, for the next breakout trade to happen, we would need to break above this magenta, and we have a breakout trade to the upside. First target would be this top. Once that top is broken, then we can put a fib, or we can even do it now, but I mean, then price will be using that fib. Let me say it this way. We recently bounced off the 61.8% Fibonacci retracement right there. And if we then break above magenta, and if we then break above the top, we have those green boxes indicating the space to the upside, and the minus 272 target is at 180. So that would be the upside scenario on the pound yen. I like that personally as a trend trader, a trader with a trend trading cap on his head. I do like this this setup. I do like the potential break to the upside here. Now in the meantime, price is retracing actually a bullish candle, but I would be a bit cautious at this point because we are hitting that resistance. Let's take a look at the hourly. Maybe if price makes a dip somewhere about close to this support level right in here, or make a dip just into the blue, that could be a support level. And a small, small attempt here to position a trade for the upside might make sense. I wouldn't put that much risk on this one because I would definitely go lower than usual because it is a risky trade and the upside might not go that far. And the breakout is more confirmation. So, but let's take a look at the 15. It would depend. We have to keep an eye on the dollar yen and pound dollar because they both are moving down. So this, of course, is sending. That's why the pound yen is moving down so much. So we have to see if that makes sense. Now, there are different ways of trading that. One could take a direct entry order right at the support, potential support here. That is the most riskiest because there's no guarantee the price stops there. The other method, of course, is letting price stop there and getting some kind of confirmation, like a wick on the 15 or the 1 hour chart or even the 4 hour chart. And then we have a confirmation that price is using that level as a support. The other method, of course, could be to wait for the breakout of the top magenta, as we already discussed. The other method could be for price to let price hit this support, let it bounce up, and let it hook back and take the hook back. Or let it move down, let it bounce, let it hook back, and then wait for the break of the top here. Now sometimes you don't get that top too close by and the subsequent bounce goes very far before you get a down move. That will be the disadvantage for waiting for this break. In that case, it might not make sense. So those are different ideas. So let's keep an eye on this. Euro yen doing the same, in fact. Let's see. Dollar CAD is inching downwards. Doesn't seem to be that interesting. Dollar Swissie broke the triangle to the downside, but it's really hanging in the middle of nowhere at the moment. It's not going, not breaking to, not continuing to the downside. So doesn't seem to be that interesting. Euro dollar not that interesting at the moment either, so that makes sense that the dollar Swissie doesn't seem to be that interesting either, because they are usually roughly correlated, although the euro Swiss franc, of course, also has its own movements. So let's see, is there anything that could be interesting? Well, the euro yen could be, in my opinion, but it's the same scenario basically as the pound yen. The difference, though, is that the pound yen has made a more aggressive upside, and that, of course, has everything to do with the fact that the euro pound is in a downtrend, and therefore we have more pound strength, and we're seeing less of that euro strength against the yen. But even the euro yen is moving up. I like the pound odd. I do like the pound odd because the pound is showing strength against the dollar. It's showing strength against the euro. It's showing strength against the CAD. There's seems to be pound strength here, and well, the pound odd could be one of those as well. And I like the pound yen definitely too, of course. That's why I'm going to keep the eye on. We can take a look at the odd yen. You can see, just to see if the pound odd or the pound yen is better. And that's difficult because pound odd yen is a bit spiky. I wouldn't even call it a range. There was a range. If you want to see a good range, take a look at this area right in here where I have the green box. Right? That was a good range. Unfortunately, we didn't have a session of range trading when the odd yen was doing this, because that was pretty interesting from a range perspective, at least. Right? At least some potential to find turnarounds at tops and bottoms when price moved away from those moving averages. So odd yen is moving up recently, so that could mean that the pound yen is better. But still, I do like the pound odd as well, although the pound yen could be better. The odd yen is maybe at resistance as well, or pretty close to resistance. So pound odd. Anyhow, back to pound odd. Let's take a look at the weekly chart here. And you can see that the price was below, then started to have trouble, and we were in a range at the bottom here, and then broke out of that range to the upside. And that upside break has been very impulsive so far. And here you can see how that daily chart looks like. Amazing, very neat, beautiful uptrend. So basically this move down could have been a move back to support. And we had a most recent bounce off of this support level right in here. So the question is, can we break and continue? That is the question on this daily chart. So the 4-hour chart, basically we're looking for a break above basically this consolidation, this bull flag. All right. When we get a break above that, there's the potential for this uptrend to continue. And because pound odd is definitely not a range environment, and basically we are looking for an upside break of this bull flag. We do have a very strong impulse off of the bottom here, right? So basically the daily support kicking in here, and we got to bounce off that with a strong impulse, bull flag. So if we break the bull flag, we would also on the daily chart be breaking the resistance here for more upside. So once that happens, basically we could see that upside. So I like the break above this bull flag to the upside. A break above this top could see a very good upside trend continuation. And from the daily chart, we could see, for instance, if we put a fib from top to bottom here, price roughly stopping at the 38.2 fib maybe. No, yeah, the 38, sorry, exactly the 38.2 fib here. The target of that could be all the way at 198. So that's a very interesting target. So let's go back to the 4-hour chart. And if we break above this bull flag, the first target could be 192. That green space there, and if we break above 192, we could have a tremendous upside potential eventually of getting here. So that could be in the pound odd. I really like this pound odd potential if we do break above there, and it would be a really interesting spot because it's just at the beginning of a potential upside. If you want to be a bit more conservative and not aim for those bigger targets, then the minus 618 target and the minus 1000 target would be the ones to aim for. Rangana, well, it's basically a range trade webinar. I mean, that's the main focus, if we find it, right? I'm not going to force fix environments, as I already told you. But the level is basically, well, it's for everyone, in fact. If you regard it as a beginning, then I'm glad, because then you know a good amount of information, I guess, so that's great. Otherwise, it's just basically using the moving averages to get an idea for ranges, basically, right? And then using support resistance, fibs, to get an idea and trend lines, right, where the spaces are. All right. So, but if you see the market already the way we're presenting here, then that's great. Then perfect job. So let's see, what else can we look at? So that, I think, is very interesting, this potential pound odd. Let's take a look at maybe Euro New Zealand and pound New Zealand, because those were very choppy, so those could be maybe range trades. Here, this is the 4-hour chart, and you can see that this is choppy. I mean, price is definitely very choppy. The thing is, though, here too, it's not really a great range because it still has the upside momentum, although the resistance is coming in. It's more like a rising wedge, funny enough. Maybe the Euro New Zealand is better. Yes, it is. Yeah, this is a typical pattern that would be a range. We have a bounce off magenta bottom. We have a bounce off resistance purple. Look at the moving averages. The green one is about halfway. You see that? And you see the moving averages are all intertwined with each other. You see that once price tries to break below it, it then moves up to the opposite side. If it breaks above it, it goes back to the bottom. In fact, that's typical for a range. So Euro New Zealand definitely in a range, and we had a most recent bounce off of a couple of trend line potentials, even this one as well here, in fact. So if you took that trade, great job. I don't know if anyone saw that. That was, I guess, last week maybe? Yeah, last week. And the only thing that's potentially possible now is maybe move back up to the top. But you know, that's a riskier trade because we're getting close to the halfway mark of this range, which means that, you know, there's just as much risk as potential reward, and that is not as interesting. Price could also stop about halfway that zone. It did so here as well. It did so here as well. It did so here as well. One way of knowing that would be a fib target. Let's see. The minus 618 target around 165.40 here could be a stopping spot before maybe moving up again. But it is riskier. Let's see if there's any other range going on. Here, this was a range right in here on the hourly. You see that? A bit of range at least. Or maybe it's even, it's actually more of a 15-minute range. Why is that? Because basically, or 15, sorry. Why 15? Because we want the basically the moving averages to be intertwined and price to be bouncing above and below it. So this was a range under 15. And we had a recently, we had a breakout, consolidation breakout. or break, pull back, and continue. But just to get an idea, just to show you one example at least of 50-minute chart, maybe this Swiss franc has it at the moment. Not yet, because you can see that the moving averages are still coming in here and use as resistance. So we are maybe going into it, but it's not as clear as the Euro New Zealand was, right? Now, is this tradable? I wouldn't think so. Well, I mean, you could trade it, but you have to be pretty good at catching the entry and TP because the width is rather small compared to higher time frames. Or yeah, I mean, it's although it's still decent, the prices are very choppy. It's not as easy as to trade because price moves very slowly and a lot of ups and downs. How about the dollar CAD? The dollar CAD is certainly not in a range because actually it's an uptrend on the 4-hour / daily and downtrend on the hourly, so it's not in a range. Maybe some funny, or not funny, but different currency cross. Does anyone have a range in mind? Let me ask you, in fact. Does anyone see a range they think could be interesting? Mention the currency pair and time frame, and let's take a look together. Or send us a screenshot. Does anyone else see something in the market that we didn't see? Some pair maybe that we skipped or haven't looked at yet, or maybe a pair that we already looked at but different time frame? So no currency pairs as yet. Let's see. Well, let me then take a look at this odd CAD. Björn, I'll answer your question. Let me answer your question first. Personally, I trade one managed account and my own account, and I don't have any smaller, or well, I wouldn't say it's small necessarily, but I don't have any other accounts at the moment. So those are the two I mainly focus on at the moment. But yeah, maybe in the future I would be thinking of expanding that, but not for the next, I would say, 6 months, because my time budget doesn't really allow me to, because I'm looking into developing actually a strategy that will be traded as a robot. This is taking a lot of time from myself. Now, if that would be ready, then I would have more time, and I don't know, maybe people would find it interesting to trade this robot, or that could be maybe an option for you, and others, I don't know. But that's why it's really a lot of time goes into developing that. So I'm putting all my spare time into that at the moment. So that's also where I want to put my focus on for the next, I think, well, it probably will take 6 months, I guess, but it could be more. It's difficult to say sometimes. So, well, yeah, if you're interested in that, send me an email and I'll give you an update how that, when the robot is getting close to finished. So that's my email if you want to send me an email and I'll give you a heads up, okay? What is the ETA expected time of arrival, you mean? I think. Yes, as the time for finish. Yeah, that's at the moment I would say 6 months, but it is a bit of a rough estimation. You know how those things go. Sometimes it can be faster or longer, obviously. So that would be yeah, that's a rough idea. That hopefully it will be true, but it's of course the closer we get to, the further we get, the more precise the date will be. So, AutoCAD. Well, basically, in a triangle like that, a triangle, of course, if we see a chart pattern like this with a particular triangle with a particular chart pattern, that, of course, definitely also could be a potential range setup. Most of the time, I look for a break out of that pattern, but obviously, sometimes the pattern doesn't break, and that would provide a very clear support and resistance level where the chart pattern will continue. And that would be good for range trades. So it doesn't necessarily, even the moving averages are quite intertwined actually, and the green one is flat. So the odd cat on the hourly would be looking like one. So we're getting close to the bottom here. And a bouncing spot, this could be then a bouncing spot. So an entry right at the bouncing spot is a risky one, but it's possible. Or one would wait for instance, on the 5-minute chart to see the break of the first 5-minute fractal as a confirmation. That could be another way. Of course, by waiting for the confirmation, you are waiting for price to eat away a certain amount of pips. Therefore, the other method could be to let the 5-minute fractal break, let it bounce, break, and let it hook back. Then, of course, that would be the other way of doing that. Sometimes it doesn't hook back, and that would be the risk of waiting for that hook back. Now, personally, I don't trade range trades, so I mean, I can't. I'm just talking from a theoretical point of view. It's not that I often take these trades or something, but I'm just showing you what you could use, which concepts you could use for maybe developing a strategy of your own. Now within the 4-hour chart, we can see that although this is a triangle that's happening at the bottom of a potential uptrend. So that would aid the fact that we could expect some bounce here, right? If we're at the bottom of an uptrend like this, then that would make the success rate of a potential bounce here at the green a tad higher, obviously. So that would support that. Pound CAD is not in a range at the moment, certainly not. It's actually in a massive uptrend. Look at this daily chart and you can see why. So no doubts about the trend on the pound CAD. That is certainly up, 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 up in a way, and has been trending very nicely here too since the summer of 2013, just like the pound dollar, in fact. And the pound CAD moved nicely to the upside, getting a pretty massive impulse to the upside, in fact. Looking at this daily chart, let's see. The question will be, looking at this current setup, I don't think we're approaching this resistance. The pound could have some struggle there, and we could see a move down. The question is, though, will we break these support levels, or will we break this resistance first? Whichever breaks first, this one or this one is most likely the direction of the bigger breakout. If we break below magenta, then most likely we'll get a bigger retracement back to the blue. Of course, it won't necessarily go in one rocket down. As I said, it could always be choppy, but eventually that will be the target, roughly speaking. Another way of doing that is putting a fib on this downside, right? Like this. And the target will be roughly the minus 618 target. If we do break above magenta, if we move down but don't break magenta, the lower magenta, let me change that into, no, let me change the upper one into orange. Like this. So if we break below magenta, we have the potential to go to the minus 618 target, first stopping at the minus 272, and then probably using the blue moving averages as a bouncing spot, and this consolidation here. If we move down here, bounce off green, and don't break magenta, there could be still the uptrend continuation potential. The confirmation of that will be a break above orange at the moment, and of course above this top. But for the moment, orange, I would say. So let's take a look at the 4 hour. So all of this downside, basically any downside that stays above this magenta could still be a hook back from our upside. So let's see if we get a hook back and a bounce somewhere around here. Last time we got a bounce roughly at the 61.8 fib, almost a 786 fib there, as you can see. So maybe that could be now the same scenario. Let's take a look. And basically, we can also put a trend line like this, by the way. Like that, okay? So that's the resistance we're looking for to break. So basically, any downside could bump into 50 or 61, and that could be a potential bouncing spot. Now, will we break? That's unknown. We could still move down and then break up, and this would be kind of like a contracting wedge. See what I mean? That's one potential. Or we indeed use the fib, move up, and then break. Or who knows, maybe we do break below magenta. In that case, we would have a downtrend on the 4 hour chart, and we would be breaking the support for bigger reversal on the daily. So there is a potential for price to do that, but we just need a confirmation. Either break below magenta, break above orange, or bounce at these fibs for upside. Is there any trade to the downside? At this moment, in my opinion, not that interesting, because we are in an uptrend and it would be too risky in my opinion. And probably too choppy within this uptrend. So wouldn't be interested in that. All right, let's see. How about maybe the Aussie New Zealand? Aussie New Zealand 1 hour looks pretty choppy. No, not really a range though. How about the Euro Swissy? That could be a range. Yeah, that looks more rangy to me. Now, obviously, range environments do tend to happen more on, for instance, Asian session, like the euro dollar, but those could be very small movements. Let's take a look. Like this was a range on the euro dollar, but obviously that is very tight. Obviously, price now in the London session, which means, you know, acting upon a range trade wouldn't make sense because this could be a breakout during this time of day. That would be a time factor that we must be aware of. During the Asian session, there's a high chance the price will stay within these levels because price will not break that much. There's not a high chance that price will move a lot to one direction or another during the Asian session. So where's the Asian session? Let me take a look. It was from here roughly to about here, I think. Let me check. I'm confused with the time. 1 second, folks. Let me get rid of these lines. Let's see. It's around. Roughly here, I think. Probably is where Asian session started. You can see it quiet down before that already, in fact. It just ended, so not much movement. But if you take, I would also consider even the very end of New York session not really a time of a lot of movement, as you can see. So, but is there a lot of pips to be made? The bottom and the tops are really so close to each other that it's well, it's possible, but does require some patience, and you have to be satisfied or aim for something quite small in terms of pips because there might not be much more, you know, to be made, basically. Well, folks, that wraps it up, I guess, from my side. If you have any questions, let me know. Otherwise, we'll be back tomorrow. Let's see. Tomorrow, also, Atlanta has a webinar in the evening. Odd USD question from Björn. Let's see. Odd USD short stop loss over 50-minute fractal. That looks good. Not sure where you entered. You entered upon the break of this green one, or did you enter already higher at the turn here? Or did you trade both? Or did you take it halfway here maybe as an anticipation of that? I don't know. Wait, let me put a 1, 2, and 3 so you can tell me which one it was. Two and a half. Oh, okay, gotcha. So you took a break of maybe this. I see what you mean. This trend line, of course. Yeah, I see what you mean. I didn't have it on the chart, but I see what you mean. Yeah, that makes sense. It's also the break of the moving averages, in fact. I didn't think about it. But that makes a lot of sense, in fact. Yeah. Cool. Great. Let me put it on the 30-minute chart. That looks good to me. I was actually having this 1 hour line, but if you use the 30-minute world, indeed, you can see this trend line. So that looks good. We are getting a lot of momentum here. So let me see what the question was. 50-minute, yes, this stop loss looks good. But if you use the tighter stop loss, if you used it here, let me see where you put the stop loss. So is it at place 1 place 2 or place 3? 1. Okay. Yeah, that looks good to me. That looks good to me. But I would trail stop every 15-minute fractal, personally, because of the fact that maybe we can get a hook back before we drop more. Then if you take some profit here, you can always try to re-enter here. Looking like a pretty good momentum too. So looking like there's potential fall possible. How far we can put a fib from top to bottom here? We do want to realize that one of those bouncing spots could be 90, it could be 89.80, and it could be 89.56. Those are potential bouncing spots. But the momentum is strong, so maybe after small bounces we get follow through. That's why I would use a trading stop, because there is potential for price to bounce to break through those after smaller bounces. But if price does make bigger bounces at one of these fibs, then we don't want to be in that trade anymore, because then we can get a long drawn out or retracement like this, and then we can get potential head and shoulders pattern, and then we can get the bigger downside. That's why I would use the trading stop to maximize the potential reward but minimize the risk of upside here. And hopefully it will break through. That would be great. If it doesn't though, then at least we've protected the trade or the capital maybe by not giving back too many pips, probably because we already made a big downside here. Even if we bounce at the 50 fib, then probably the bounce will go back up to resistance and then make one more downside at least due to the resistance now kicking in. And then you could move that trail stop up to that fractal, and then you wouldn't have any risk on that trade anymore. And hopefully it continues down, or it indeed makes the bigger retrace. Well, let's see, that could make sense. I would say you have about a 1.5 to 1 now. I'm not sure, but exactly depends. Might be 1.5 to 1. Maybe it's a tad lower than that, R to R. I don't know, maybe a quarter could make sense, or a third. I think half might be too much. You could take maybe a quarter here, for instance, and half here, or another quarter, and let the other quarter run, for instance. Although that's a lot of trade management, so it depends how much time you have, of course. The more time you have, the more trade management options you could really employ if you want to. I'm not saying anyone has to do that, though. So that is, it's possible, definitely. I like that because it helps my psychology. So it depends. If you like to go for let the profits run, then you might as well let it go. So it depends on your personal preference. All right. So I hope is that any other questions, Brian? Okay. Sure. Yes, that is the if you trade it using the 50-minute fractals, then the advantage is that you catch the a bigger potential if it does fall. However, because it's an uptrend, that's why I certainly wasn't against taking some profit. I do think that having sometimes discretionary TPs would optimize the equity curve, or would optimize sometimes the TPs. So in that regard, I have nothing personally against using a bit of a balance between a trailing stop and using TPs. But the other option is just using only the trailing stop, and the advantage is that it's easier to trade manage, and if there's a big run, then you catch the whole full big run indeed. The disadvantage is that the equity curve is a bit rougher, whereas if one trades for part of TP and part trailing stop, the equity curve is a bit smoother. But alrighty, folks, so that will wrap it up today. Yeah, Bjorn, I understand. Well, let's see, we could discuss it tomorrow, see how things went, and we'll learn every day, step by step. We can learn from that, from every trade. And if you have any other questions in the future, by all means, let me know, and we can look at it together, okay? So we can do that, for instance, tomorrow. We'll be back tomorrow at the same time, same place, Wednesday again. And in the meantime, I wish you a great day and great trading. Cheers, everyone.
The